Good afternoon, all traders, subscribers, invited guests across the globe. This is Jeff Kilian for the Vector Traders Consortium, vcttraders.com. And today we're going to do one more excellent professional presentation on the SMI, which is better known as the Stochastic Momentum Index, officially Stochastic Momentum Index. And I feel that every trader could benefit from using this indicator as the only price-based indicator really that I have below my prices in my own workspace from my own trading desk that you're looking at right now versus any other indicator that I could have to be able to give me the intelligence that I need based on a price-based indicator to be able to make end-of-day and real-time trading decisions on a daily basis. So what we're doing here on our daily trading decisions is we're looking for the confirmations of change in market direction, the setup for that, yes, but the definite confirmation, the objective confirmation on the change in market direction. Now, this could be at major market turning points, but could also be within those major market turning points to have short-term aberrations to the upside or the downside within an existing downtrend or an existing uptrend. So this should be the only trade-related webinar, and it will be uploaded at some point. We're on a holiday schedule right now to our YouTube channel to be able to discern exactly what you need to know, what you should know, and nothing more, but definitely nothing less, regarding this extremely powerful and uncannily accurate indicator. So before we begin, there's something that I have to say that I always say within all of my training, whether it's in the course material, the mentorship program, you need to understand very well as an end-of-day or real-time trader or investor that you don't need to overload the amount of indicators that you're using within your workspace or workspaces. We need to go for the time-tested indicators that worked 50, 60 years ago, as far as you can go back and take a look at the charts or back test if you want to, up until today. So this is what we've done with this particular indicator, as well as all of the indicators within our arsenal on this end. So this is not something that we just started to try out 5 years ago. Okay, this is something that's been around for a long, long time. So for those of you that don't know the official definition of what this indicator is, basically, it is a normal, I'm going to refer to what I wrote down, excuse me here, so I make sure I get this right. It has a normal range of values between 100 plus and 100 minus. So when the present closing price is higher than the median price or midpoint value of the high-low range, the resulting value is positive, okay? And when the current closing price is lower than the midpoint or the high-low range, the SMI has a negative value. So it's similar to the Stochastics indicator that was created by George Lane. Everybody knows that indicator over, I don't know, geez, a long time ago, maybe 30 years ago, 50 years ago. But it has a momentum line that's associated with it to provide the additional necessary confirmation that the trend is officially starting to change or has changed in direction, whether short, long, or in between the long-term downtrend or long-term uptrend for those aberrations for the opposite moves for a short period of time. So for me, my personal preference is to use the -50 level right here. And this is just above the oversold level, which is where these areas are, right, these three right here. So this is important to know. I have specifically not included the negative area 80, so I could show you the positive divergences compared to a higher price, lower price on the actual daily numbers for the YM E-mini futures themselves. So this positive divergence existed long before the prices started to trade up, as we mentioned in 2 of the previous webinars that are posted to the YouTube channel. You can see right here, On the 30th, I believe it is, yeah, 10/30/2023, that this positive divergence was absolute, meaning objectively found, identified with, correct. There's no ambiguous analysis. Completely objective is where we need to be. So at this point, the pent-up buying pressure on this particular indicator that had not yet taken place in the form of the future directional price movement to the upside was obviously, it was evident. Now, this is outside of all the indicators because we're focusing on this particular indicator today. So let's get rid of this for a moment. And remember the 30th on this particular example right here. This is how far the price is traded up. And now we're in a situation where the indicator is in overbought territory above 80 here, as compared to the signal that fired when the momentum line crossed here at this point. So now we have a situation where we have a high probability in an isolated indicator's finding that we can go. We should gear up to go long. And sure enough, that was correct. Now, at this point, there are many levels to the upside here that these prices could tap out at, right? It could be here, and it could be, could possibly be right here. Control C and F, excuse me. Let's do this again. There we go. Here, 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 right? And then to the downside, if things turn around, the first level to the downside would be right here. And this is based on yesterday's down closing price, excuse me, at 11/21/2023, 1700 hours settlement price. Now, it's no coincidence that the prices did tap out right here because we have very close to a double top where some volume came in to drive the prices down and more volume came on to drive the prices all the way down to this point. So we have POCs here, especially here. That's the largest amount of contracts traded on an end of day basis, excuse me again, at a specific price and time. That is a POC. So there's no coincidence, again, this has happened here. So this is why this indicator at this point is tapped out, overbought territory way above 80, more like the 90 level, flattened out and looking to cross from above to below. Updating your end of day analysis at this point would clearly show you whether this indicator is now crossing above to below or continues to move sideways at this point. If it is crossing above to below, that would signal a high probability of a move to the downside to the bottom of the channel where prices are located right here in the near future. Now we are in a holiday weekend, so I don't expect a lot of action, right, because of the situation. Now, analyzing YM, which is the Dow E-mini futures, which is actually a better deal, people, if you have a small account size, is $5 for every quarter point versus ES is $12.50 for every quarter point. So every full point is $20 versus, there you go, 50. At this point, let's take a look at the market turning points, right, here, and let's look at how they coincide with some of the action that took place in the crossovers here on the SMI indicator itself, right? Okay, and we'll amplify this, right? Let me get this out up here for a moment. Okay. That would be here and here. 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 And of course, we're looking at this and we're looking at this, right? And we don't have this one yet, but for the sake of demonstration, the illustration will include this as a possible potential market turning point to the downside where the market has exhausted itself based on the SMI indicator. Can I get a raise of hands for everybody who understands exactly what I'm laying down so far? It's pretty straightforward, simple, easy to understand. A raise of hands, please. Okay, thank you all. Thanks, Jerry. Thanks, Johnny. A lot of people just came in shortly after this webinar began. We are close to capacity, so that's a good thing. Okay, so one moment. Let's get back to here and and move on. So this is as simple as it has to be on the upside and as simple as it has to be on the downside. Now doing this will train your eye to be able to see all this without laying any of it out, which I am able to do, right? Because of the time and grade that I have in. So there you have it. We have matches across the board from above and below the most recent market turning points, major market turning points, right? And the intermediate term, short term market turning points, some turned out to be a little more profitable on an end day basis than others. So where we're going here with this, people, traders, is that price action is price action. Okay, it's a way to get to the bottom of what the real probabilities are. And when you're greater than 80%, you're good. Because that's all you have to do with strict mitigation to be able to stay in this business, get in it, and stay in it for the rest of your life. So now that we've viewed this, which is my primary market, by the way, because of the accessibility, because of the liquidity, because of the price chart pattern uniformication, because of all the other indicators that are so high probability wise potentially profitable across the board. I have to be careful what I say because there's so many rules and regulations nowadays. It's almost gotten off the damn charts, but that's fine, not literally. But it's a little nuts out there right now, so we have to be careful. But I think you know very well exactly what I'm talking about. So let's get out of this workspace and this chart, and let's get into ES. Now, anytime you're going to look and make the relative comparison between, yes, this indicator here, right? Okay, we need to start with ES. So I'm not starting with the Dow. I'm not, equities. I'm not starting with the S&P 500 equities. I don't care about that because the majority of the time, the futures lead. So for example, just for the sake of explanation, why I am so steadfast about this is that because in the middle of the night, the overnight session kicks in, 3 Euro time, and things could change drastically. But by the time 9:15, 9:25 rolls around, the futures are trading way up as compared to yesterday's close. As compared to the futures, whether ES and Dow combined, right? As compared to, in a big way, stocks, the S&P 500, that index, whatever's inside of it, whatever's inside the Dow 30, big board, right? If the futures are way up, the market's more than likely going to open and run straight up, or it's going to gap up on the equity side. So you got to be prepared for that. And this is why at this time, but sporadically, I trade only futures, and there are exceptions when I do trade stocks. But the methods that we teach here, what we're going through here today, people, have universal application to any stock, any index fund, any ETF that has enough liquidity, meaning enough volume, that can power the indicators that are available in most any program, although I'm presenting with the NinjaTrader 7 still, because I like it, right? We don't have to reinvent the wheel. Then we look at this and we start here and we do the same thing. And here we are. Let's just do it right here. And let's get this positive divergence, right? That was obviously evident before the market turned out of the way, right? What day is this? Here's the 30th. So YM kicked in on the 30th with an official positive divergence compared to these prices on a longer time frame too. This is an intermediate term positive divergence as is compared to a short term on YM, which is even better because there's more pent up buying pressure that hasn't taken place yet in the form of the future directional price movement to the upside. And here we are. Here we go. And there it is. So the 30th on YM, the earliest warning or heads up would have been on the 30th on YM, and then here the 31st, right here, right there, 1031 on ES when you had it. So the Stochastic Momentum Index, you know, below here where you're looking at, and only one indicator in every subgraph, by the way, is your guide to confirm not just the setup in this case, but you know, the final confirmation, the objective confirmation that the move is not only, you know, set up to go, but now it is going. So there are going to be times that you don't have to wait to cross from below to above the negative 50 level here. That's an additional confirmation for the strength of the trend going to the upside. What I do, which I haven't included because of the positive divergence that was laid out, and let me get rid of it now. Is show you that here we are at the negative 80 level right here. That's about as far as you're going to see this indicator ever go. I don't care how far back you look. You can go as far back as you want. So there's a clear sign that things are about to change. Finish it up. Here we are. Here we are. Right? Here we are. And the same thing here. Nothing changes. And again, once you get used to doing this, you know, practice, as they say in the old days when I was a kid, right, a youngster. It clearly says that practice makes perfect and nothing has changed. I mean, the more you do something, the more it becomes you. I have a lot of training under my belt from a lot of professionals, and a lot of those professionals are on the psychological side of trading, you know, and what we want to do here is train you how to identify with the major market turning points that you have a better than 80% chance, I mean, high probability chance, right? In order to be able to get a real opportunity within 3579 days, 3579 days, 35 days here, another couple days here, in order to trade end of day, whatever you're trading, right? Or real time, well, that's where the lion's share of money is to be made. And there is no overnight risk, but everybody has their profile, their method that they use to trade. But what we're looking at here is a universal application of proven technical analysis to get behind the prices and find out what the hell is really going on. And when and where do we have any real business trading real money or not? Because if we don't, then we stay in the sidelines and you don't do a goddamn thing. You wait because you don't have to prove a goddamn thing to the market. The market has to prove to you that it's worth your time, your emotional capital, your monetary capital. And I am embellishing this point fiercely because I know this to be true. I've been trading over 25 years, and it used to be a different way. And if you go against what I'm saying, you're not going to like it. And when the next trader comes along, whether it's end of day or real time, you're going to be afraid to take it because you didn't follow the rules. Now, are we, you know, at the tip of the iceberg? Absolutely, we are. Yes, we are. Are we laying down more than most everybody lays down? Yeah. Is there a lot more to exactly how to interpret this indicator and nail it? Levels inside of it as compared to levels on the prices, everything, right? Of course there is. But we're at a very good tip of the iceberg here right now. And before I go, This is the VTC line labels indicator. By the way, this is included in an offer that we're going to run down in just a couple minutes here. When it's above the prices, it's resistance. When it goes below, it's labeled as support. This is one of the biggest all-time time savers I've ever seen in my life. We invented this many, many years ago. It wasn't me, it was Alex Felix, part of the VTC team. So anyway, if the prices do trade down, I mean, this is the first point they should get to because of the interlocking bars at this point, right? And then where the volume has dried up exceedingly from the way up here, right? If stronger volume comes in here at this point at the 45.06 approximated level, maybe 45.10, then you have a free and clear from here to here at this point. That's a lot of points, people. That's 25, 44.25 to 40, 44.25, excuse me, to 45.10. That's an enormous amount of money. It looks small on an end-of-day chart, but on a real-time basis, that could be 5, 6, 7 trades to pull in a lot of money. And I know because I've done it. So remember, your greatest positional advantage is waiting for the prices to come to you. You don't have to prove anything to market. There's no sense in pushing the trade. There's always another trade coming down the track, but there's not always more money. And there's not always more psychological reserve, even though you may have the money. We have to be prudent, build a case like a great attorney, right? Make sure we're going to win. A greater than 90% chance we're going to win before that trial even starts, before that trade even starts. So begin with the S&P 500 mini futures, do this, then go into IM. That's all you need. You don't need the Dow or the S&P 500 equities. And I want to show you two quick samples of stocks that you could run the same analysis on. One moment. Okay, this is Tesla. I'm not going to put all the dots down here because you should be able to do this on your own right now, but these are the major market turning points on this stock in isolation. This is a dog because you can see the prices are way low here, even though this is the 21st, right? Yesterday's close, as compared to where the YM numbers were and ES numbers were chart-wise way up here. And I wouldn't trade this anyway. I wouldn't even trade options on it, and I don't even know if they're available because I don't trade options. But I can tell you that I wouldn't trade this because of the gaps. Over here, you had some price chart pattern uniformity, but it all got broken up here. So that tells me that I don't want to touch this. Look at this erraticism here. But the point is, if you were going to trade Tesla, I mean, you could do the same thing. Something that would be a lot better would be Amazon here. Similar, but not the same. I mean, stocks, here's the stocks gapping up, gapping down. But at the end of the day, if you looked at the volume numbers on Amazon versus Tesla, you would have seen, because we don't have time to go through this, that right here, there was a major, major volume coming in at this point right here to drive these prices up. And that's something that you didn't see on Tesla. Do it. Go for it. You'll see it. So any stock that has enough liquidity, any index fund that has enough liquidity, any ETF that has enough liquidity, you're not married to futures. We had to use something. We have to use something in order to do our general end-of-day analysis to come with a conclusion. Where's the market at? Should we be trading long or short? Right? Are we at a superior resistance level like we are now? Right? And does that indicate that, you know, we should be gearing up to possibly trade short again? Absolutely it does. Absolutely it does. So if we're going to go short, we know exactly the levels that exist to the downside, along with what the indicator and the subgraph below is going to show us, right? And the free and clear moves that exist based on the levels that were laid out on the way up to find their way home on the way back down. Some of you in this room have already taken our course. Some have not. Some of you who are in this room are coming back for a refresher because they've studied in our mentorship programs directly with me, which puts all this on steroids. So what it tells me is that what we're doing is right, because some of these people who have been through the system here, I mean, that was 10 years ago. We've been in the business for what, 13 years now. It was 10 years ago, 5 years ago, 3 years ago, and they're doing great. So they're coming back looking for the confirmation, which is good, because we have to live in a constant state of betterment, a constant state of education. Who you decide to hang around with, who you decide to let into your sphere, right, directly affects your psyche when it comes to trading, believe it or not. This is no different than any other person who's at the top of their game, whether it's Andrew Tate, whether it's whoever it is, right? You could talk about Tiger Woods. You could talk about Michael Jordan. They all have the same mindset. They don't care what you think. They don't care what you say. Whatever you say, if it's negative, it's already erased. You go for what works. You match and model what has been working 50 years ago, was working 10 years ago, 5 years ago, 3 years ago, yesterday, and next week. And the market should open up a little more. So remember this. Remember this very clearly, because I don't think that anybody else is going to tell you this way. And this is why we have had such a high success rate. So everybody has a mini control panel there, and we do have time for a few questions. Go ahead and fire away. Okay, so there's a question that came in from I'm reading it, I'm sorry. There's a question that came in from Jeremy in Australia. Interesting. Okay, Jeremy says, what other price-based indicators have you used? And, you know, basically how, it's a long question, but how have they worked out for you? I used the regular Stochastics index years ago. I've used a few momentum indicators as assigned to price. I mean, the list is long. But when I was going through what I was going through in my tenure, you know, over 20 years ago, when I was up all night, every night in Vegas, studying all night, I basically did this the hard way, which nobody wants to do in today's world. I went through every single indicator that was known to man. I put one in the subgraph below, and I just went back and looked at the charts, and I'm looking for market turning points, long-term, intermediate term, and short-term, and I'm trying to figure out what gave me the best signals. That's it. I study with a lot of the greats who are not with us anymore. Tom Borovic for Divergence Analysis, and we put that on steroids. Ralph Campora, John Murphy, you know, years ago. So, you know, these things that I have come up with, thank goodness, thank the universe, they're working today still, because it's all about how do you find the deepest pockets? How do you know when they're going to move with a high probability of accuracy? And then how do you trade in the same direction at near the exact same time after they make their move? And this SMI indicator is one of the most, I feel, the most powerful price-based indicator on the planet. Another question. How often do I trade? Well, that depends on the market conditions, but I'm definitely trading if the market's opened up early AM from 7:30 on. As soon as the market opens, or before the market opens, 5 minutes at the latest, I'm out. And then I'm back in after I see a clear market direction based on the 15-minute charts, the 5-minute charts, and then my execution screen, the 1-minute chart with the SMI and the volume. Obviously, I have a lot of custom indicators that we had written here for ourselves that I use to trade in real time, but that's not necessary if you're going to trade end of day. All you need is what we've been going through here on the majority of our webinars. So, yeah, we are getting out of time here, but let's see what we can do here with this. One moment. Copy, and let's get this in the chat area. Okay. you'll need to go to your mini control panel, and there's a link in there. Now, it's not something that's made up due to the economic condition and what's going on in the world. There's a lot of uncertainty. People have very limited funds. We did a pre-Black Friday sale on our S&P 500 E-mini futures and through market timing course, which is most everything that you'll need in order to get a lot more than a foundation's handle on how to start trading as a professional. So if there's any one course that's out there, I believe it's this, because I designed it. It's administered directly by me, okay, talking to you the same way I'm talking to you today. There are 7 modules. This is the course page, 1, 2, 3, 4, 5, 6, and 7, how to cross the bridge in real time. Most of you have seen this course. A lot of you, again, have already bought this, but this is for the new people who just came in, new subscribers. There's probably 12 in this room within the last week or so. So the price on the website, originally it was $24.97 in real time, very first time it was presented. The special pricing on the website is $14.95. We sent out a deal for $9.97 throughout the last month and a half. And then we reduced the price to this year, $4.97. So the link that you have is a very special link that goes directly to this payment portal where you can buy this course. You'll get it within a half hour after final payment is gone through the portal acceptance algorithm, and you can start studying immediately 24/7 online, no matter where you are. As long as you have internet, you're good. I mean, you're done. So that's a good thing. And you can study as much as you want. So there you have it. I do believe that anyone who has a serious interest in learning how to trade as a professional, you're going to have to invest in yourself. You're going to have to take the opportunity to be able to, or create the opportunity, better said, in order to make this happen for yourself. So let me get this email address in here. If you have any problems with this link, we'll leave this webinar open for a while. Okay, you can email us at this email address that I'm putting right now. It's vtctraders.com at vectortradersconsortium.com, and here it comes. There it is. In the chat area for the entire audience to see. Sorry you wouldn't have more time for questions. If you have a few, you're free to fire them off at the same address. We are always busy, but I will get back. And the people who have been here in my webinars and worked with me know that I do get back within 24 hours. Unless the market's opened up in a big way. That could change things, but I don't see that happening, overnight. So at the end of the day, I want to thank all of you, the new people, especially who've come in. I know for sure that what you have learned here today, you can take and use into your trading immediately. Deciding on the course material is a good thing. We'll work with you for 30 days. And if you're not completely satisfied with what you have invested in yourself, we'll give you your money back. No questions asked, none whatsoever. I'm more than confident on the material, the presentation, the dissemination of the intelligence that we're giving you. So for now, I'm going to get out of this camera because I'm not photogenic. But, it's good to see the guy that's on the other side of the curtain, right? Like the Wizard of Oz, curtain being pulled back. When I always referred to the smart money, years ago, the biggest institutions, the BlackRock, the Vanguard, the State Street, the offshore hedge funds that can and do move prices from one level to another. It's good to know who's there. So I am real. And we're over here living in the Dominican Republic for about 15 years now, almost nonstop. And the reason why that's happened is because trading has afforded me this kind of lifestyle. I have not invested in a big way to make money, any real estate, antique cars like this, the thing today. Nothing else, just trading. That's it. And it has been good to me, but I have put my head down and I've made the commitment like you're going to have to do. And even if you're talking to a financial advisor, at least you're empowered to know what the hell they're doing with your money. When they recommend the play of the day, you can look it up and say, let me get back to you. Well, I'm looking at it. This doesn't look like it's going to go anywhere. Why are you recommending this to me? The market's going to tank. The stock's going to tank. Or this fund's going to tank. Let's go into money market and let's hang out or do T-bills up and until, we can have another conversation, right? You can't trust those guys. You can't, because they're making a commission and back money from those funds every single quarter of every single year, as long as you have your money in there. So why the hell do they give a damn about you, right? Not in a big way. No, not unless they're in maybe the 1% category who are ethical, moral, right? And, they understand the laws of cause and effect and how it's going to affect them if they do the wrong thing. So this is amazing. Almost every person is still in this room. Oh, what an incredible thing. So let me get off this camera. As I said before, I do want to thank all of you for coming, participating in our webinar today. This is Jeff Kilian for VTCtraders.com. And we hope whoever celebrates whatever's coming up, you have a great holiday. Keep your head down. This offer that we're providing today is only good for a few days, the Black Friday deal. That's it. So I would encourage you to take advantage of it, because it's not going to come back for a long, long time. Otherwise, it wouldn't be a legitimate sale, right? That's it. I'll leave this room open. Click through the links. Any questions about anything, you're free to get back to me. And as I promised, I will answer them as soon as I can. Thank you. Be safe wherever you are. Enjoy your holiday.